Well, we're just over the halfway mark of 2023, and it's a good time to take stock and reflect on what the markets have done so far this year. I'm your moderator, Audrey Simon, and joining me today is Fund Manager from PSG Asset Management, Gustav Schulenburg. Gustav, thank you for joining. And today I'd like to ask you, what's happened in the market so far?
Thanks, Audrey. Yeah, it's been a volatile year to date. We saw a regional banking crisis in the US. We've seen inflation and interest rates rising and seeming to roll over now. The ongoing war in the Ukraine is obviously causing a lot of uncertainty. And then most recently, we have seen a bit of a boom in the tech and AI-driven stocks. If we bring it closer to home, we've had unprecedented levels of load shedding. We've had the Russian vessel docking in Cape Town, the Lady R, which has caused a lot of currency volatility. And then on top of that, we've seen higher inflation and rising interest rates on the back of a weak consumer and a low business confidence cycle. So it has been very volatile. It's been a tough first half to 2023.
Yeah, it certainly does sound like it's been a tough year. So what does this mean for investors, and what's the impact been on your portfolios? How have you responded from a portfolio manager perspective?
Yeah, it's always tricky when one looks at short-term movements. Our job is to remove emotion from decision making and try to stay open-minded. And we also at PSG Asset Management try to take a long-term approach, focus on the fundamentals more than shorter-term macro fluctuations, which is much harder to predict. For this reason, we've responded to where prices have performed well, and we would typically, in our process, reduce exposure to these inclined portfolios. And obviously, on the other side, if the fundamentals remain intact and the opportunity is compelling, we would be allocating some of that capital into current or new opportunities based on the fundamental long-term outlook.
So, taking all of that into consideration and looking forward, what do you anticipate for the remainder of the year, and how are you adjusting or positioning your portfolios to take advantage of that?
Yeah, so it's very hard to make calls for the rest of the year, but what we are doing is taking advantage of some of this volatility. Volatility creates opportunities in different parts of the market. Right now we're seeing quite a bit of greed and euphoria in some pockets of the market where we think share prices have gone way ahead of fundamentals. On the other side of that, we see pockets of the market that are underappreciated, where there's a lot of uncertainty and pessimism. This creates good entry points for investors with an open mind and a long-term outlook. So yeah, we're actually quite excited. We still remain of the view that the global cycle, a massive global cycle, has passed an inflection point just after COVID. And we think that many investors are either unaware or unwilling to acknowledge this. So we're quite excited about our portfolios and the positioning. We believe that our portfolios are well positioned for a world where we think inflation, interest rates, and the flow of capital will look very, very different to the stimulus-induced decade we saw pre-COVID.
It's been a pleasure talking to you today. Thank you so much for joining us and sharing your insights.
Thanks, Audrey.
Thanks.